consumption expenditure. What was the consumption expenditure? The expenditure which is done by all the sectors. Today we'll be seeing what are the sectors in the economy we have. Okay, along with that we have seen the investment. And investment refers to what? Investment is only what? The additional capital stock which has to be done in the economy. Okay, so that is what it represents. We used to represent I as delta K. Delta K means change in capital formation. So in the economy, what will capital formation is there? That is for a particular year that will be finding out. So that is only what the investment. Here you can see that investment is only the capital formation. That is only the process of increasing the capital stock, because ultimately investment will increase the production. Okay, it will increase the production when the investment will be there. So automatically the investment, either it will be on raw material or it will be on fixed asset. So somehow it will be the reason for increasing the production in the economy. Along with that, we have the components of investment that we have seen in our previous class, where I have informed you about the first component, that is what? The fixed investment, which is also called as the fixed capital formation. The another name for investment is only the capital formation. So in here, instead of investment, we have used the capital formation term. Okay, and here the fixed investment is why it is known as fixed capital formation. And that is only the gross investment. It will also be called as. Why? Because the gross value will be considering, not the net value. So what's the difference between gross and net value that I have informed you yesterday? The difference between gross and net will also be called as depreciation, that we have seen. So that is what yesterday we have discussed for this fixed capital, or I should say the fixed capital formation or the fixed investment. Okay, we have discussed that is what we have will be taking only the gross value at which we have purchased. And in this year, what is the stock of that fixed asset we have purchased, that will be finding out. So what will be the formula at the end of the year? What is the stock we have? We'll deduct with that stock, we'll deduct what? The value of the stock which was there in the beginning of the year. So closing minus beginning you will be doing. Okay, and that is what? At the end of the accounting year minus at the beginning of accounting year, you will be getting what? The value which is added in this accounting year, the value of the capital formation that is made, the value, or you can say the additional stock which has invested this year, that you will be able to find out. So here we'll be taking the gross value of the machineries, equipments, the building premises. All these value will be taking, because all these are the part of the capital formation. And then we have also seen the inventory investment as well. What do you mean by inventory investment? Inventory is the stock. Okay, the stock investment when I talk about. So business, they used to, or I should say the firm, they used to invest where? They used to invest usually on the raw material, on the semi-finished goods, as well as the finished goods also they'll be having. How the finished goods they'll generate? By producing the goods. So that is what the finished good, or still the goods is not produced yet. It is semi-produced, that is why it will be called as semi-finished, or else you have purchased the raw material with which you will be making the goods, that will be the another part of the inventory investment. So what will be the formula for this? Again, the closing minus opening will be doing. So for that, closing stock of the finished goods, raw material, as well as the semi-finished good, you'll get the difference with the opening. So you will get what? The inventory investment which is done in this accounting year. Here you can see always will be taking the gross investment, okay, for this calculation. And when we will deduct the gross investment from that depreciation, you will get the net value. When I talk about the net value, suppose you have purchased, the same example I'm giving, suppose you have purchased a machinery of rupees 100, and today the value of that machine is 90. So that 90 is the net value, and the 100 at which we have purchased, that is the gross value, and the 10 rupees of the depreciation you will be deducting, you will reach to net value. So here I have informed you yesterday, okay, about the depreciation as well. The another name for depreciation which we have, it is called as consumption of fixed capital. When we talk about the consumption of fixed capital, okay, in economics we have this term. Okay, we did not see this term in accountancy. So we'll be understanding this consumption of fixed capital as the economic term only. For depreciation, depreciation is the regular term, but usually we'll be understanding this concept by the consumption of fixed capital, which will be also called as replacement investment. And what when I say these all terms, so here you can understand here the depreciation is what the same meaning, the same concept of accountancy. When the value of fixed asset it is decreasing, that is only the depreciation. Why it will decrease? Just because of regular wear and tear, just because of passage of time, and along with that the expected obsolescence, just because of change in fashion, change in technology. So here obsolescence, that all things will be understanding for that. Now when I talk about this depreciation definition, so how to get the depreciation here in economics? So it will be again the gross and net value difference will only be the depreciation, that you understand. Hope till here you got the concept. I gave the proper recapitulation of this topic as well. So the topic of the day is what the stock and flow concept. Now, for understanding the stock and flow concept, okay, I'll give you the example first. What do you mean by stock? Okay, whenever you got the stock, or whenever the business is investing somewhere, okay, so that is what it is measured at a point of time. How? Suppose today we have the stock of rupees 10 lakh. So that is what today at a point of time we are measuring the stock. But every day the business they are purchasing the stock. Okay, every day they are making some investment. That will be the flow, because it is measured over a period of time. Suppose I should say the investment which is there in the bank today, you got the 5 lakh rupees in your bank account. So that is your stock of money. But you got the income, I'm earning suppose 20,000 income every month. So that is the flow concept, which is flowing every month. I'll be getting it. It is not the stock. But after on 31st March, when I see my bank account, it got 31st. That is what on 31st March it has the balance of 5 lakh. So when I talk about the balance of 5 lakh which I have today on 31st March, that is not the stock concept. But the income which is continuously increasing, that is the flow concept. The water which is flowing from tap, okay, so that water which is flowing, that is the flow, and the water which is then bucket, that is only the stock. The water which is there in a tank, that is the stock. But when I say the water which is flowing, that is okay, from a tap, from in a river, or that will be the flow. So which is measured at a point of time, that is the stock, and which is not measured at a point of time, which is measured over a period of time, that will be the flow. The example you can see here first, the population. We used to get the every 10 years the census report. So that population we are seeing at a particular time. Okay, that is what the stock concept. But if you see the birth rates, death rates, that is the flow concept. Just opposite of it. Wealth of an individual. You got these many assets. Okay, you got as an individual, you got these assets. So that is the wealth you are seeing at a point of time. But yes, the income which is continuously adding to it, his bank account, okay, to that individual, that will be the flow concept. So again and again, the recurring nature you can find, that recurring nature will be there for flow. And once will be there when once will be finding out, that will be the stock. Water which is there in the bucket, the water which is there in the tank, that is what today we have this much stock of that particular water. So that will be understanding, that is why it is not a time dimensional. But yes, the flow is time dimensional. We have to hold, we have to wait, and then we'll be able to find out. Static concept, the stock is the static concept and the flow is the dynamic concept. It will change. Dynamic means which changes over the period of time. So flow, it will change again and again. Suppose today my income is 20,000. Tomorrow my income will be, suppose I'm the commission agent, so my income will be 25,000. Again, it will change. It will increase, it will decrease. Okay, just because of my holidays, the income will change. Because the expenditure example you can take. Today you are spending this much amount. Tomorrow you cannot spend again the same. It may increase, it may decrease. So that is why it is the dynamic concept flow. But when I talk about the stock, it is the static concept. Today you will be finding out, so it will not change. The water which is there in tank, today you are measuring it, so it will not change.